Coming up on Market to Market, a wet and wild week of weather provides drought relief. And sorting the options for seasonal agricultural workers from outside the U.S. Those stories and market analysis with Ted Seifert next.
Thanks for having me.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, January 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A new year brings new opportunities, and for some, a new job. The U.S. economy added 156,000 jobs last month, below market expectations. The unemployment rate is 4.7%, a tenth of a point higher than last month. Orders to U.S. factories fell in November for the first time in 5 months. The Commerce Department attributed much of the 2.4% dip on the volatile category of commercial aircraft. The trade deficit rose to its highest mark in 9 months as more oil came into the country as less airplanes, autos, and farm products went out. The trade deficit now stands at $45.2 billion. The U.S. dollar posted a 14-year high this week, driven by strength in manufacturing, but then quickly retreated by week's end. Makers of automobile and truck chains likely experienced an uptick in business this week for anyone traveling I-80 in California. As the West braces for storm totals not seen in the last 10 to 25 years, the question over whether the drought is over rises again, including for the 18 million Southeasterners still in drought. Josh Bittner has our weather wrap.
2017's meteorological birth pangs were felt across the nation this past week. Low humidity and gusty winds sparked wildfires in parts of Oklahoma just before the new year, but no injuries were reported. According to the University of Nebraska Drought Monitor, parched conditions in the southeast saw a 10-point weekly improvement into January. Early this week, 60-mile-per-hour winds hammered the Florida Panhandle and parts of the Gulf Coast, uprooting trees and damaging 30 homes.
We're getting a lot of rain, and then I thought it was hailing, and then the window to my room blew in, and I figured it was a little more than hail.
Heavy rains pummeled the deep south from Mississippi to Georgia a day after severe storms killed 4 people in Alabama.
We don't know what it was. We don't know if it was a microburst. We don't know if it was a tornado.
By midweek, heavy snow blanketed parts of the western U.S. and pushed into the Rockies. Blizzard conditions closed major highways and triggered a small avalanche in the Sierra Nevadas. Stiff winds toppled a towering evergreen into an Oregon home, killing an 8-year-old girl, the child of a volunteer firefighter working during the storm that downed trees across the state.
It's an act of God. We had trees falling all over Portland and the coast today. We had strong winds last night.
Golden State storm clouds, however, may contain a silver lining. Near Lake Tahoe, snowpack surveyors took the first manual measurement of the wet season and found water content roughly half of normal as California flirts with a possible 6th year of drought.
Many of the stations set monthly records for precipitation in October, and that really set us up well for increases in reservoir storage.
Several feet of snow are expected to cap the week in northern and central California's mountain areas. And what surveyors find between now and April 1 will guide state water officials in managing the water supply of the nation's most populous agricultural producing state. For Market to Market, I'm Josh Bittner.
At least one California farmer is expecting a smaller pool of migrant labor in 2017 and invested $600,000 in automated equipment. His hedge is based on Donald Trump's campaign trail promise to deport millions of undocumented immigrants and fortify the border. You can read more on this story on our website, iptv.org/M2M. For those operations with legal immigrants on their payrolls, getting those farmhands on the land was no easy task. Colleen Bradford Krantz explains in our cover story.
5 years ago, the owners of Michigan-based Leitz Farms found it was becoming harder to find workers to harvest their fruits and vegetables. By 2014, the family-run farm launched a major recruiting effort, but still had trouble finding enough manpower.
We had really good crops, we had good markets, good weather. We could sell everything we produced, and we couldn't get it out of the field. We left about 60 acres of tomatoes in the field, and when the markets were as good as they were, that was a lot of money. I'd say it's probably about $1 million worth of product left in the field.
Leitz Farms turned to the H-2A visa program for help. The paperwork-heavy labor tool of last resort allows seasonal agricultural workers from other countries to work in the U.S. for a limited time. Once the visa expires, the laborers are required to return home. Leitz is among many who use the federal government pathway to bring labor onto his farm. Experts say that many undocumented immigrants who had quietly worked for decades at U.S. nurseries and fruit and vegetable farms have either been reluctant to deal with tighter enforcement or are aging and no longer want to work in the fields. Some find work in other industries. Mexico, which had been the primary source of undocumented labor, has experienced a declining birth rate, and their young people appear to be less likely to risk illegally entering the United States for seasonal field work.
The H-2A program is the last alternative for growers. If you have a good migrant stream or if you have local people who can do the jobs, that's what you better do first.
The number of temporary agricultural workers requested through the H-2A program has nearly tripled in the past decade, from nearly 51,000 in 2005 to almost 146,000 in 2015.
This is not easy labor, and many individuals here in the U.S. That reside here in the U.S. have found other routes, and those that used to do this, just the same ideal that we want to have things better off for our children, and so that idea has pushed following generations to move up, as it were, from that type of labor into the next step.
One Florida company brings in nearly 450 H-2A workers to provide labor for the area's citrus and blueberry producers.
I would not want to go back to try to find what we classify as domestic labor to pick fruit. It would be almost impossible to do that. H-2A is going to cost you a bundle to get in it. But the one good thing about H-2A is you know you can depend on your labor force from day to day.
The H-2A program requires farms and agricultural businesses to hire U.S. workers who apply and meet the qualifications. Despite the right to be first in line, owners say few, if any, local residents apply to tackle the labor-intensive jobs. Along with having to fill out a lot of paperwork, employers are required to cover the additional costs of travel, housing, and food for each international employee.
The extra costs involved with the H-2A guest worker program are relatively significant, anywhere from 10 to 20% more. But they've also said, due to peace of mind, that they know they have the workers that are supposed to arrive at a certain time and they have them for a particular period of time, that extra cost is worth it, even though it cuts into their margins pretty significantly.
Leitz Farms, in its second year of using the program, hires about 220 workers to pick and package tomatoes, cucumbers, blueberries, apples, and cantaloupe. Most H-2A guest workers stay in the country for 2 to 10 months. For those he hires on his Michigan farm, the program offers greater income without having to move to the United States permanently. 24-year-old Maria Natividad Zamora left Michoacan, Mexico to package tomatoes at Leitz Farms. Zamora says she made 3 times what she would have made selling clothing at a flea market at home.
Well, yes, you miss your family and all that, but you also learn. Also to come alone and to get ahead.
500 miles away in West Bend, Iowa, organic grain farmer and egg producer Corey Fair turned to the H-2A program when he could no longer find enough U.S. workers to help weed certified organic crops by hand.
Well, our labor needs really went up as we added more and more acres of organic. We started using farm contractors or trying to hire local people, had a hard time finding people that would consistently show up to work and do a good job. And 3 years ago, we were introduced to an H-2A program and gave that a try. And since then, we've been increasing our soybean acres and increasing our applicants for H-2A.
Fair's request for H-2A workers from Guatemala was inspired by his connection to a former employee from the Central American nation. The former employee makes a list of those who will first be willing to work hard and second, are facing particularly difficult financial situations.
It's a very poor community, and this is a way they can better their lives by coming to America, working, getting paid, and still be able to go back home and be with their family versus the people that take the risk of coming to America anyway, illegally. It's dangerous and it's wrong.
Byron Luis Matom Chavez was among the 27 the farm hired in 2016. Chavez says he hopes to return next year because the money he made was significantly more than he would have made in Guatemala.
If this opportunity was not there, they would try to come across, to come in like illegally, because that is the only option that they have.
Fred Leitz, who is also president of the National Council of Agricultural Employers, said the H-2A program could be improved dramatically.
You know, we're one of the lead organizations that were telling Congress way back in the 90s, come on guys, we've got this problem and we need this fixed. We need a good visa program. I think H-2A could be improved. First off, it could be moved to USDA. Agriculture has a problem and it's now come to a head. They keep talking about building a wall, but you don't need a wall if you have a good visa program.
Both sides of the aisle on Capitol Hill have acknowledged that even the legal immigration system needs some kind of reform. It's still unclear as to what, if any, change will occur. Until that day arrives, Leitz and Fair will continue to complete the piles of paperwork required to get enough labor to bring in the harvest. For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
A surprising rally in the Chinese yuan, coupled with South American weather concerns, fueled the markets. For the week, March wheat again improved 15 cents and took the nearby corn contract along for the ride with a 6-cent gain. South American weather concerns waned by the week's end, and the March soybean contract gave back 9 cents. March meal declined $5.30 per ton. In the softs, March cotton expanded $3.34 per hundredweight. Over in the dairy parlor, January Class 3 milk futures improved 14 cents. An across-the-board sell-off in the livestock sector as the February cattle contract shed $1.22, March feeders dropped $1.30, and the February lean hog contract gave back last week's gains, weakening $4.10. In the currency markets, the U.S. dollar index was off 8 basis points. Crude oil gained 27 cents per barrel. Gold gained buyers, improving $21.70 per ounce, and the Goldman Sachs Commodity Index improved 0.5 point to finish the week at 398.25. Here now to lend us his insight on these and other trends is one of our regular market analysts, Ted Seifert. Ted, welcome back.
Hey, thanks for having me.
Before we get started, you can listen to our market discussion anytime by downloading our market analysis podcast on our website, iptv.org/M2M. Ted, this was an interesting week, particularly in the currency markets. The U.S. dollar rallied like crazy early in the week, broke hard. Have we put in the top on the U.S. dollar?
Ooh, that's a great question. I don't think we have, just mainly because I don't think we're done raising rates, and I don't see anybody else who's going to get more aggressive on rates than what we might do. But, you know, a lot of time when we talk about tops, we talk about exhaustion blow-offs. And you can kind of see the case for that. I don't think so. I mean, we kind of did it really when we were still kind of hanging on to, thinner holiday trade. And so I don't know how much stock we put into that. Just like, the big sweeping reversals we saw in cattle and hogs last Friday, or, the Friday before New Year's. I mean, it's on a chart, it's there, but low volume. You got to take that with a little bit of a grain of salt. We'll see, but I think the dollar has more upside yet.
Okay, but this break in the dollar certainly appears as though it's been a wind at the back of the wheat market.
Yeah, a little bit. Wheat's definitely gotten some strength from that. Wheat has some other things going on too.
Exactly, and that's one of the questions we've got from our Twitter follower. Tim in Minnesota is asking, as temperatures drop, he says it's negative 18 up there in Minnesota. Wheat is heating up. How much more upside before I sell more old crop wheat?
Yeah, that's a great question. I think you want to look at that as a scale-in sort of strategy. And you can use sort of the similar strategy, what we've done in row crops over the last couple of years, and I think now is a great time to do that for wheat. We were actually going in and buying calls for producers so that we could sell cash on a rally without giving up that upside potential, and calls were very, very cheap. But I think you got to start looking at that now, because I think we've seen in recent history that rallies in wheat can be very fragile. So I think you do want to take any sort of opportunities you get to start pricing in, but you do want to keep some of that upside potential open. Funds are very, very short. I've been talking about this for a while. If they want to get out of their short position for whatever reason, there could be a lot of legs and say 40 to 60 cents. But I don't know if we have anything yet to say that they're going to get flat or go long the wheat market. Okay. If anything, they may have trimmed their short position, but they could be waiting to put that right back on again.
Okay. Now, wheat has been one of those markets that it seems like as we start the new year, everybody talks about where is the profitable trade in X year. Right. Wheat's been one of those thrown around. Folks are anticipating that short covering by the spec funds?
Yeah. Well, there's certainly that. I mean, when we look for things like that, we look at the makeup of markets and who's short what. And, if you've got a very large speculative position, a lot of times that's an interesting market to take the opposite side of. But also, there's been what seems to be an interest in commodities as a whole from the large speculators, from the funds. And what they're looking for is they're looking for value. They're looking for commodities that are near their lower end of their, the 5-year ranges and inflation adjusted, value. You see that in wheat. You see that in corn a little bit. And getting into the new year, I think we've seen some of that trade in the market where you've got the speculators, certain speculators looking for that specific setup, and I think they found it to some extent in wheat, but also a little bit in corn.
And so a little bit in corn. We saw corn move 6 cents to the upside today this week on the nearby contract. Was that solely spillover support from the wheat market, or are there fundamental factors going on that get you a little excited about the corn market?
Well, I think it's mostly spillover from the wheat market, which is very much tied into the dollar. So if you put those two together, I think that's most of it. But we've got a report coming up from the USDA. I'm interested to see if we're going to see, a lot of people are talking about the USDA needing to increase soybean acres yet, and that might mean less corn acres. I'm interested to see if that 175 national average yield holds. I'm kind of wondering if that comes down. Maybe that's a little bit high. That's typically when we have the USDA give us a record yield in September, October. Usually that number comes back down just a little bit, so maybe we're looking at a smaller production number. But overall, the acreage conversation is there too. So we're getting into that time frame where corn may want to not give up as many acres as what some people are forecasting at the moment. So if you look at the corn-bean ratio, corn might want to hold its own, if not do a little bit better going forward.
Climb a little bit. Yeah. So now, as we look out to next Friday in that USDA final report, do you anticipate any shocks? I mean, if we get a slightly smaller corn yield number, is that going to be a big market mover?
Yeah, I got to say, we're not going to do anything to put this corn crop to a point where we're going to go from a 2.4 plus billion bushel carryover to, like, say, a 1.6. Okay, but I submit my numbers. We're one of the firms that submit our numbers, and looking at that, I'm on the lower end as far as my production number, as far as my yield number, and as far as my acreage number is concerned. So maybe, but the surprise can go either way. I mean, if that number comes in larger and we're at a 2.6 or 2.7 billion bushel carryover, I'll say this January report has a tendency to give us some big moves in the market. We tend to get some surprises on this report.
If I'm sitting with a lot of unpriced old crop corn, if I'm still sitting on some unpriced old crop beans, what would I be doing to mitigate some of that stress come next Friday?
Well, we got kind of heavy on Friday this week, so it kind of took a little bit of your options off the table.
Okay.
But March 350 puts were going for 3.5 to 5 cents.
Okay.
I even got some off early in the day on Friday at 5.25 to 5.5.
Okay.
And I think it's a great way to take some protection for. You can look at that as both old crop and new crop, for just sort of a Band-Aid to say, let's get through this report, let's get through South American weather. January and February tend to be heavy months for grains markets, corn and soybeans in particular, if we're not getting a South American weather issue. So I think that time frame wise works very well for me, and price wise I think that was pretty value.
South American weather. We had Argentina a lot of ground was flooded, maybe up to 5 acres. Hasn't been much of a market mover, still looks like a big crop down there. Are beans just in a downward trend here, trying to tighten up that ratio between corn and beans?
Well, we did have that reversal higher in soybeans Wednesday, I believe. And until we take out the lows there, that buy signal is still intact on a chart. So we'll see. We didn't quite do that on Friday. We might do it first thing on Monday. So, take that with a grain of salt and watch that closely Sunday night, Monday. But for the moment, possibly downside is the downside potential very much there for soybeans if South American weather doesn't give us anything to talk about. At the moment, there's some small pockets of not the most major producing areas that we're looking at. The concern there is that if they do expand into the more major producing areas, then we have something to talk about. As far as the flooding in Argentina, I think more than anything else, that is a question of acreage. That's going to get planted. The potential is going to be there, but you may be losing some corn acres in Argentina that could be going back to soybeans, which that's not necessarily bullish for soybeans, but might be a little bit supportive for corn. But South American weather, that's really the ticket right now. If we don't have a problem with South American weather, things could get rather heavy between now and the end of February, so it could be.
And from a producer's perspective, you're not using heavy in a good way.
No,
things could move downward.
Yes, prices lower
fairly quickly.
Yes.
Let's take a look at the livestock market. We had cash trade most of the week around 118. We did see a little bit of a step back here on the board. Is this just a correction from that nice rally we've had for the past month and a half?
I think it's a couple of things. Yes, it's a bit of a correction. I mean, we had gotten a little bit overbought, and at some point, you got to take a breather, and so we've done that. But to some extent, and we've been saying this for a couple months now. I think it's very interesting that normally this time, normally period, we have futures trading at a premium to cash, and we're trading a discount, a pretty decent discount to cash right now. And you wonder if that's the futures market being very reluctant to embrace the strength in cash and trying to predict that cash softening over time. I think there's a good chance that might happen. I think you could have a deeper correction in cattle at some time in the relatively near future.
The 6 to 8 week time frame?
Well, again, I don't know how much stock we want to put into it because it was thin holiday trade.
Right.
But we did have that big outside sweeping reversal down day the Friday before the New Year's holiday. That's usually a big red flag that, hey, either the high's in or we're getting really close to it.
Okay.
So from a technical perspective, yeah, I think maybe sooner rather than later. Now the question is, from there, do we recover and go and test those highs again? There's a lot of what ifs in that. A big one is demand. Are we going to expand demand? Is China going to make good on, they said they were going to start importing U.S. beef in a big way by the end of the calendar year. That didn't happen. Is that going to happen in the first or second quarter? We'll see. But if we don't have that, we'll keep watching weights. I mean, we've had our bouts of some very cold temperatures, and weights have been a concern. But there's a lot of beef in cold storage.
You bet.
And you could see a fairly deep correction in cattle at some point.
And do you expect feeder cattle just to follow right along with corn in this range?
Yeah. Okay. Corn's going to be a big driver for feeders going forward.
All right. Let's take a look at this lean hog market.
Yeah.
Again, it's got that incredible story throughout the year of a massive dip and then a major recovery. Now we sold off 410 here this last week. Have lean hogs topped out?
That's a really good question. When we put a bottom in lean hogs, unlike the cattle where we have a V, or you can call it a checkoff bottom, you do have a nice little double bottom sort of formation in hogs. And then with the recent highs, you do have kind of a nice little matching double top formation. I think we had a compelling reason to rally off the lows like we did. In particular, we saw cold storage numbers. Well, at the time we were putting our lows in, we saw cold storage numbers coming in below expectations, yet we were looking at record kill weeks. That's a good sign for demand. But now that we've gotten through the peak demand season, Christmas hams and so on and so forth, you saw ham prices basically halve. And so products coming down. You do think that now is the time for a correction lower. But I wonder if what we just did was kind of carve out the range. Worst case scenario, I think, is carve out the range between the lows that we put in back in October and the highs that we put in just last week or in the last
45 to 65 maybe is a range?
Yeah, I wonder if we trade sideways to maybe higher, because if you look further down the pipeline in hogs, while weights have gotten bigger up front, and that kind of shows a little bit of a backlog there. But further down the pipeline, you do see supply starting to soften a little bit. So there's reasons to be somewhat optimistic for hogs. I don't think we're going to see new lows in hogs.
Okay.
But we could spend some time trading this range that we just carved out.
All right. Well, Ted Seifert, thank you so much for taking the time to join us.
You're absolutely welcome.
That wraps up the broadcast portion of Market to Market. But Ted and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. While you're there, check out this week's M2M podcast as we talk about globetrotting's impact on rural America. And join us again next week on the broadcast when we'll look at how a wood pellet company is finding new markets overseas. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.